Welcome everyone to Mr. Linux Many channel. This is another in the series and we're looking at accounts. Alright, so we'll continue where we left off. If you have not watched the previous video, just ensure that you watch part 1. So this is actually part 2. Let me just make a note of that. Alright, so we have already completed part 1. So it says, which of the following sets of accounts will contain only debit entry in the trial balance? Discount A, discount receipt, stock, purchases, returns, salaries. B, sales return, wages paid, machinery, discount allowed. Or is it C, wages due, rent, sales return, discount allowed? Or is it D, salaries due, discount received, sales return, and stock? So which is it? And that would be sales return, wages paid, machinery, and discount allowed. So that would be. All right, let's move on to 24. The accounting cycle entails the following procedure. 1, posting to the ledger. 2, making adjustment and closing entries. 3, journalizing. 4, preparation of final accounts. D or 5, extracting a trial balance. And we are supposed to put it in the, I didn't even realize you're supposed to put it in the particular order. All right, so we know that 1, we have to journalize first, so that's 1. Post to the ledger, that's 2. Preparation of final accounts, that would be 3. Let's see. Making adjust, that's 4, and the final one. Hold on, guys. 3 is 1, that's correct. 1 is 2. Oh, this should be 3, man. Extracting trial balance. And this would be 4, that's correct. And the final one would be preparing a final accounts. As I was wondering, what the hell am I doing? So let's just see which of them have in that order. 3 first. So either this or this. 1 next, alright. It comes down to the, alright, so that would be B. This can be a little bit tricky, guys. I will admit that, alright. Can be a little. Alright, let's move on to 25. The gross profit of a firm is $3,600. Bad debt $100. Rent paid $120. Rent prepaid, that's $20. And general expenses $80. And discount received $110. And we are supposed to find the net profit. Now the net profit is gross minus expense. So it's a little bit tricky. Look at each item. All right, so we have $100 bad debt. So we can take away that. We're not gonna get that. Rent paid, which is $120. All right, $80. Yeah, let's say $80 first. It's another expense. All right, discount received, that's 110, and the prepaid, so we already prepaid it, so let's just add this and get 130. So minus 130. So basically, when we minus is basically add. Internet went on. This is happening a bit regularly, but nevertheless, the work goes on. So let's look at 26. We had completed 25. I would say that it is 3,430. All right. So it says, which of the following expresses the balance sheet equation? And is it capital equal assets plus liabilities? We know that's not correct. Asset equal liabilities minus capital. We know that that is not correct. So let's investigate the others. liabilities is equal to assets plus capital. No. Liabilities is equal to assets minus capital, right? Because you know how the steps go, so that would be, all right? So let's move on to 27. See what it says. It says, which of the following are nominal accounts? 1, wages, creditors, purchases, and 4, furniture. No, wages is 1, so let's look at that. All right, so that would be 1 and 3 only. So that's A. Let's move on to 28. On January, on January 1, a trader bought 100 articles at $5 each. During the month, 70 of the articles were sold at $8 each, and the remainder were sold on January 31st at the market value at $3 each. What was the gross profit for the month? All right, so this one is a little bit spooky. So what we have to do, guys, is to find out some stuff. All right, so it's 100 articles at $5 price that he pays for all. So that would be 500. Yeah, that's right. All right, let us see his sales now. 70 of the articles at $8 by 8 0 0 8 0 0 8 7 56. So that's 560. And then now the remainder by 3. All right, so that would be 90. All right, so to add this now, you can see that the 500 from this, I got 60. So we spend 60 plus 90 would be 150. So the answer is actually right here. All right, for the persons who might not understand, I'm gonna add this and show you. We're gonna add this. This is the total he sold for. That's 650. So he spent a total of 650. No, his total sale is 650. However, he has 150. Just in case someone might say, you don't see, oh, I got that. All right, I'm trying to cater for everyone as much as possible, so everyone can get the full understanding. All right, let's move on to 29. Oh, these are the options, so we'll go up here. The proprietor of a business took home an old office desk valued at the books at $450. How should this transaction be recorded in his books? All right, so should we, the doctor office should be credit, drawings, account, debit profit and loss account, credit office furniture, or debit drawings account, or credit office furniture. Debit drawings and credit office furniture. Yeah, so that would be C. Guys, these all look alike. You have to read them very carefully. All right, item 30 refer to the following information. The cost of stock purchases is $400. Trade discount is 10%. What is the cost of the purchases entered in the ledger? All right, so we're gonna find 10%. I can just find 90%. I will find the 10% and subtract. Sometimes students get a little bit confused. 10% of this would be 10 times 4. That's from the original, which is $400. Sorry. All right, so that is A. Let's move on to 31. All right, so 31 says a supplier offers the following discount. Trade discount 12.5%. Trade discount of the list and cash discounts of 3%. What is the lowest amount that will be paid for a good that with a list price of $1,600? Oh God. This one can call a little bit of stress. So let's find 12.5%. Just for time. Get that calculator. That's what I understand. No, I'm not supposed to be telling about. I don't want the video too long. reimbursement. Da dee da dee da 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 da. All right, so that will go to 200. Not sure if I understand this question. All right, so that is A. All right, I kind of cheated a bit, guys. So it's 3%. It's still correct. Works out to 42. 42 or 32. So all right, so we subtract that here. All right, you know your opinion on that one. When a company declares a dividend of 15% dividend warrants into the shareholder owning $500 $1 ordinary share is that will be 225. Let's move on to 33. A bookkeeper discovers that an amount paid into a supplier has been wrongly entered in another supplier's account. What book of original entry will the bookkeeper use when correcting this error? Is it A, cash book, B, general journal, C, purchase daybook, or D, sales day? Drum roll, guys. That would be the general journal. Let's move on to 34. A supplier account in a customer book has a credit balance of 8,000. What does this mean? A said the customer owes the supplier 8,000. B said the customer has paid the supplier 8,000. Not going to go any further. It's A, customer owes the supplier 8,000. Credit. All right, let's move on to 35. At the end of the year, the capital of a business was 33,000. At the beginning of the year, the capital was 28,000. During the year, the owner withdrew for personal use $2,000. So that's just what is his net profit for a year? So that's 30. So chop 28,000. That's fine. All right, and he withdrew 2,000. So add that to that. Go for the time, brother. All right, let's move on to 36. Some people do that. The maximum capital of a company can issue to a public is called, is it A, authorized capital, B, issued capital, C, subscribed capital, or D, paid up capital? And that would be authorized capital. So 36 is A. Let's move on to 37. A limited liability company is owned by A, is it state, B, the private shareholders, C, the public at large, D, a limited number of partners. And that would be the private shareholders. So 37 is D. Let's move on to 38. Which of the following tasks would not normally be carried out by a bookkeeper? 1, keeping the journal. 2, extracting the trial balance. 3, drawing up of the final account. And 4, I don't know why I put it before this, auditing the accounts. All right, so drawing up the balance sheet, that's 1. Audit and this, so that will leave us with So you're supposed to keep the journal, extract the balance sheet, but you're not supposed to be drawing up the balance sheet. All right, let's move on to 39. Which, when comparing the books of a company with the books of a sole trader, which of the following items on the balance sheet would differ most in the presentation? Is it the capital, B, the current asset, C, current liabilities, or D, the fixed asset? And that would be the capital. Right, so let's just look at 40. I think I made that error. 40 is supposed to be down here. Alright, let's go back to 40, guys. I'm so sorry about that. Which of the following transaction will not be recorded in the purchases day book of grocery shop? A, bought from K. Lee goods, that's 500. Purchase goods on credit, 975. Bought chicken on credit, $1,000. Purchase cash register on credit, 1,200. And that would be D, purchase cash register on credit. All right, so now we can go up to the 41 that we had originally. All right, so they gave us cash on hand, trade debtors, stocking on accrued expenses, and trade creditors. And they now ask us for what is the working capital. This one is going to be spooky. All right, so let me just work out this now. So the working capital, so that's all right, so let me just put pen here. All right, so 5 plus 4, 6, 10, so that's there 1, so a 6, 8, 14. I'm going to subtract this. All right, guys, I'm not being something right. Oh Lord, 1, 2, 6. This is supposed to be 12,000. Right, so we now have 12,000. So we're gonna subtract 48. We could just add them. So 7 and 5, 5, 5. So it would be 12. Let's add them, guys, make it easier. 5, 5, 11, 6. That would be B6, 5. Right, let's move on to 42. A trader had an opening capital of 3,900, his drawings were 900, and his closing capital was 4,860. What is the net profit? So the capital at 39, his drawings are 900, right? So it was 4,860 plus the drawings. So that's 576. That's 0, 6, and 7. Up here. For 860. And yeah, all right, so that would be C, 1,860. All right, so we add the closing and the joins, and then we subtract the capital, and that should give us the net profit. Let's move on to 43. An employee works for 45 hours each week. He is paid $4 per hour for a basic 40-hour week. Right? This gross weekly rate is so 45. So we have to split a 45. So 40, and then so that we work by 4. So that's $4, right? So that should give us 160. All right. There's an additional 5 hours, and that rate is by 6. So 5 by 6. 5, 6, 30. So overtime plus regular, which is 190. So that is E. Let's move on to 44. What would be the effect of a firm balance sheet of the purchase of equipment and credit? Is it A, asset increase, liability decrease, asset increase, liability increase, asset decrease, liability increase, asset decrease, and liability. All right. All right. So on credit, so the asset are going to increase as you get the asset. So it's either this or this. The credit on credit, so credit are going to increase, so your liability are going to increase, so you owe more, so that would be B. All right. So guys, you have to reason out what of them asset increase because you're getting an asset. However, it's on credit. You didn't buy it on cash, so your liability are going to increase, so that would be. All right. Let's look at 45. Mr. Jones. Mr. Jones' business began the month with an overdraft of $1,200. During the month, total deposits were $2,000 and the total payments were $600. What was the cash balance at the end of the month? All right, so him start owing 1,200. Then he make a deposit. So him adding 2,000 in his account. So I add 2,000. I have 800 now. Yeah, because yes, so you owe 1,000, but you're adding 2,000. So let's put 2,000. Because you have 800 in your account. All right, and then now we pay $600. So subtract that. You have $200 left. So that would be a debit balance of $200. All right, let's move on to 46. A business operates is petty cash in the Impress system. At the beginning of the month, the petty cashier was given $200, out of which she spent $152. How much will she be reimbursed? All right, so they're going to give about the same amount that she spent. And they're going to keep it at $200. So 152. So all right, guys, so we have come to the end of part 2. Do ensure that you guys watch part 3. This is Mr. Lennox Bennett. I didn't put my name there. Alright, guys, please ensure that you like the video if you have not done so. This is Mr. Bennett. I'm out. No doubt. See you guys in another video. I'm out.